creative financing and the fact that terms have value. A lot of times we're growing up, we're thinking, I need to get a good price and then I need to sell it at a higher price. Or when you're trying to acquire things, you just want to get things at a low price. Well, don't forget there's price and then there's terms. Think about car dealers. Are they selling cars based on the price or based on the terms? Terms have value not only to those that are acquiring what it is with those terms, and in the case of a car, that's expensive. So instead of coming up with $40,000 cash for that car, they're able to acquire that car, the prestige, the feeling, the lifestyle as they're driving around for a payment. So terms have value from the standpoint of acquisition. That's why we like to create creative financing when we can, when we are acquiring property, if there's equity in that property, or when we are trying to sell whatever it is that we're trying to sell. Of course, there's terms as well. Think about buying a house. Does somebody say, hey, I've got this great house. It's $350,000. Great. Here's $350,000. Thanks for the house. No, there are terms that allow us to be able to buy that house. There are lenders out there that have lending criteria where they're requiring a down payment, and then they are taking back some kind of a payment for 30 or sometimes 40 years, sometimes 15 years. They want a down payment, so you've got some skin in the game, helps them with their risk. But again, you're acquiring a property for terms. Terms are the way that makes it even available to anybody that isn't rich already and has $350,000 just to give to that seller or more. So terms have value. So when you are acquiring property from a distressed homeowner and you're able to create some creative financing terms that are favorable for either you as the end user of that property because you're getting the deed, or whoever you're selling that property to, if that creative financing, say a low seller carryback scenario or a subject to where you're taking over a payment on a loan that's say 3% interest, like we're seeing so many of these loans that were made not too long ago, and you've got distressed homeowners, you're buying that property subject to the underlying financing, taking over the payments, the seller's name is remaining on the loan, you're getting the deed to the property, you're then able to do what it is you want with that property. Those types of creative financing scenarios have value because if you're turning around and you're able to then rent the property out for more, great. If you're able to do a lease with an option to purchase where somebody is giving you a lump sum as an option consideration, and then they're making monthly payments on a rent-to-own type of a scenario where those payments are higher than that creative financing scenario that you've established when you acquired the property, great. If you are assigning that contract for a fee to a real estate investor, they are truly going to appreciate the terms of that deal because they need to know, how do the numbers stack up? How did you acquire that property in the contract? Because they're going to have to perform on that contract. So if you're able to establish in the contract that you're buying the property subject to the underlying financing, the seller's name stays on the financing documentation, you're getting the deed to the property. If somebody is stepping into that deal because you're assigning that contract, that's going to be very valuable to them. If there's some equity in that deal and you've structured that favorably as well, where you can give the seller as little money as possible and still make it work for them, have some kind of a carryback for them to then accept some type of a payment down the road, either a lump sum or something favorable, very low to no interest, very few payments, if any, things like that. An end investor who's stepping into that contract, performing on that contract, and then actually closing the deal, that's going to be very valuable to them because they are then stepping into a scenario that's favorable, that has potentially a much lower interest rate, a much lower monthly payment, and then they're getting the deed to that property as well. Then they can choose what they're going to be doing with that property, understanding that there are some choices because the terms are so good. So it could be that then they're willing to pay you even more for that contract or be interested in the first place. So all of these things are proof that terms have value. It's not just price, it's also terms. And a lot of times investors will give a price if the terms are great. If you could get the property at the price that the seller wants and your terms are phenomenal, well, it could be a win-win altogether. I hope that plants a seed in your mind as you're considering the numbers of both the price and the terms of deals. I'll share more with you in the next video.